Hello, everyone. My name is Terry Shevchik, and I am a senior wealth advisor on the FirstOntario Wealth team. Thank you for taking your lunch hour today for joining us for today's webinar, which is an introduction to responsible investing. Before we get started, please note this session is being recorded and will be available on our website after the presentation for you to watch or review. Our chat function is disabled, but if you do have any questions or comments, we encourage you to call us at 1-800-616-8878. Once again, that's our main FirstOntario number, 1-800-616-8878, extension 1700, or email us at investments@firstontario.com, and we will personally respond to each of you. We're very excited to have an expert from NEI Investments with us for this important session. Matthew Izalauro will share need-to-know information about responsible investing and ESG, all designed to increase our awareness of what it means and why it's important to you, your family, and your community. I came to FirstOntario 6 years ago, and since then, I've had the opportunity to learn much more about responsible investing. And I'm proud to say that I do have my responsible investing specialist certification. That's my RIS designation, as do all the wealth advisors at FirstOntario. FirstOntario Credit Union believes that it is important to ensure our members have a solid understanding of all their investment options. And as a purpose-driven organization, responsible investing is aligned with our credit union's values. It is a proven way to grow your money for the future. Now, I'd like to take the opportunity to introduce Matthew Izalauro from NEI Investments to you. Matt, did you want to go ahead and talk a little bit about yourself before you start the presentation?
Yeah, for sure. Thank you, Terry. I appreciate the introduction. Again, my name is Matthew. I started my career with NEI not too long ago after I graduated from Laurier. And something that you might not know about me is that when I started in university, I was in environmental sciences. I'm very passionate about environmental preservation. And when I discovered NEI and how they invest with their responsible investment philosophy, I found that it was a perfect fit for me after attaining a degree in finance. So thanks again, Terry, for the introduction. And with that, I'll get started on a quick introduction to responsible investment. Next slide there, Matt. One more. Perfect. So first, let's start by defining, what is responsible investment, right? Maybe you've heard the term before, but I'm going to use the definition that we use. And this is sort of how investment professionals define the word themselves, right? It includes a few more terms, but I'll explain them a little bit later. And then I'll give you an even simpler definition, one that you can share with anyone you meet to tell them a little bit about what responsible investment is. But essentially, responsible investment means that you're making an investment decision that looks beyond traditional financial factors like earnings and balance sheets and cash flows, but you're also considering the environmental, the social, and the governance factors that sort of guide the company's operations. So the goal in doing that is to deliver more value for investors and to make a positive impact on all stakeholders of the business, not just investors, employees, the communities, and the planet. So we often shorten the words environmental, social, and governance to ESG, which is often another word we use for responsible investment. Next slide there, Matt. So what is ESG, right? So these are the three factors that we consider when we look at a company's ability to operate responsibly, right? So these are things like the environment. Is the company a steward of the environment? Are they reducing their carbon emissions? Maybe we look at if the company is managing the relationships with their employees appropriately and the community around them. And then we look at governance. Is the company a leader? Is it diverse? Is it fair and progressive? Not just with their employees, but with their compensation, right? So we're looking at, by not looking at these ESG factors, they are critical to how a business operates within the environment, the community, and employee relationships. And they're a big part of what responsible investment is all about. Next slide there, Matt. So ESG factors drive company value. And this is a recent phenomenon, because if we turn the clock back to the 1970s and we look at the value of a company, we could see that the value of the company is mostly in tangible assets. So these are things like property, plant, equipment, right? Inventories, right? Businesses were a lot simpler to evaluate. But today, the reverse is true, right? Now companies, most of their value, 90%, is determined by intangible assets. So things like brand value, patents, trademarks, software, goodwill, right? The company's social license to operate, right? So these assets are what we're after when we're looking at ESG, when we're looking at these ESG factors, because they are foundational today to the value of a business. So to summarize the importance of ESG, when we're looking at evaluating a company, we look at, as asset managers, the traditional financial analysis. So the cash flow, the income, the balance sheet, the profit of the business. And then we take an additional step and look deeper into the ESG factors of the business. Now for an even simpler definition, right? And often the reality is the definition is quite simple. Responsible investing is a way to achieve your financial goals while helping to improve society and the environment right along the way. Is it a trend? No. Responsible investment assets globally are now over $35 trillion. That is a lot. Canada specifically is the fastest growing region for responsible investment in the world, according to the latest Global Sustainable Investment Review. Canada is also the region of the world with the highest proportion of assets that are invested responsibly, with over 62%. So then the question is, what does it mean for you, right? Everyone invests first and foremost to grow their wealth, right? And of course, at the same time, everyone wants to make a positive difference on the environment, on society, if they're able to, right? But responsible investment is so much more than that. So before we, get into how making money can make a difference, let's talk about what responsible investment can do for you, right? So here now, we're going to talk about a few reasons to invest responsibly that you might not have thought of before. The first reason is that it's relevant. The issues that surround responsible investment are happening all over the world today, right? Things like diversity, equity, inclusion, worker safety, digital privacy, equitable pay, the impacts of COVID-19, and of course, climate change, right? These are all current and pressing issues that responsible investment really seeks to address, right? Everything that we look at, we do with a purpose, and it's to drive society towards more sustainable, fair, and equitable outcomes, right? They're being brought to life in the news, in the media, every single day. And by incorporating responsible investment into your portfolio, you can make the difference. And who here believes that their moral and ethical values are important, right? Another reason to consider responsible investment is that it can align with your personal moral and ethical values, right? For example, with our NEI portfolios, we exclude tobacco, weapons, nuclear, gambling, and pornography from all of our portfolios. It gives you the opportunity to do that. And some responsible investment approaches will exclude even more, right? Or focus on one specific segment, a thematic opportunity. One may be focused on the environment. Another reason to invest responsibly is, well, to make more money, right? And in this case, to reduce risks. There are plenty of examples where companies made the wrong decision and shareholders suffered as a result, right? So here are a couple examples of that. In 2010, BP's value declined sharply after their Deepwater Horizon explosion and oil spill off of the Gulf of Mexico. This event was not just detrimental to the environment, it was detrimental to investors, right? Confidence was lost in the business and their ability to operate safely. We want to avoid these instances if possible, right? And considering responsible investment is the first step in doing that. And in the other example, SNC-Lavalin stock dropped after the corruption charges were made public in 2019. Another example of how incorporating responsible investment approach could help avoid portfolio risks like these, right? Now imagine being invested in those companies while that happened. Wouldn't feel so great, right? But if you did look at those ESG factors, as we do at NEI, you would have been able to avoid these instances before they happened. Another reason to invest responsibly is not just about avoiding the trouble, right? It's also to find opportunities, right? The world is growing, and over the next 30 years, it's estimated that the world will need 50% more food and energy, 30% more water as well. How is that going to happen? Well, there's plenty of innovative companies out there dedicated specifically to resource management. And they're not solving these challenges just alone. They're making money doing it, right? Companies that are focused on resource optimization and sustainability can make great investments. For as long as the world continues to grow and will need more food and more water and more energy, these companies are set to prosper. You might miss out on opportunities if you're not thinking about profiting from this global secular trend. And with responsible investing, you can not only measure the growth of your investment, but you can also see directly the impact that your investment is making. So these figures are from the Environmental Leaders Fund with NEI, a fund that takes advantage of the mega trend that I discussed of resource optimization, right? And these numbers that you're seeing on the screen represent the impact of a $10 million investment. Now, of course, nobody has $10 million to throw around, but collectively, across the assets of the fund, there's over $500 million that are contributing to these changes, to taking these numbers of cars off the road, and to reducing the amount of electricity consumed, or to reducing the amount of waste and the amount of water consumed as well. So imagine the impact that that makes, and the impact that your dollars are having in reducing your carbon emission footprint. And you can see how collectively, which is what mutual funds do, we can make an enormous impact together with these responsible investment approaches. Another reason to invest responsibly, and one that is particularly unique to NEI. Who here might feel like, there are a whole lot of things in the world that they cannot control? I do. And the beauty of responsible investment is that you get a say. You get a say at the table, and you can use your ownership in the business to shape their decisions. Because how can you change a company if you don't have a seat at the table, if you don't own the company as a shareholder, right? So some responsible investment companies like NEI, and we are the Canadian leader in this regard, will actually meet with the management of the businesses and discuss some opportunities or risks that they face. And our philosophy is that it's so much more effective to change a company if you own it, right? No company is perfect, and imperfect companies aren't necessarily bad if they're willing to change. So even though some companies we own may have ESG challenges that we invest in, for example, Suncor, we engage with them through meetings with management, voting on proxy items, dialogue with other shareholders, to empower our investors to have their voice heard and to make changes to the business that align with the responsible investment philosophy. This is a powerful driver of change, to have your voice heard on how companies are managed. And it too can make a difference. In 2021 alone, NEI engaged with over 100 companies and voted on almost 10,000 proxy items in shareholder meetings. Now that's a lot all at once, I know. Responsible investment is a profound philosophy of how you can invest while making a difference, reducing risk, and aligning your portfolio with your own investment philosophy, right? So now I'd like to share an example of how you could invest with NEI to capture the mega trend that's growing in the world of more energy demand, specifically for electrification. NEI's Clean Infrastructure Fund is designed to capture the global trend towards renewable energy sources. We know that the demand for electricity worldwide is only set to grow. As people become wealthier, as they spend more money, as they increase their needs, we're going to see the demand for electricity double by 2050, as electricity is more and more widely adopted for use in transportation, in heating, in buildings, in industrial processes. This is a very strong trend that presents a significant investment opportunity. So we know also, because the global electricity demand is going to grow, we know that renewable energy is what's going to capture a large proportion of this trend over the next decade. Electricity, over time, will be increasingly generated by renewable energy. We can see the growth over time in renewable energy sources, and the trend is clear that it will continue to grow. Wind and solar generation capacity is expected to grow at around 11% per year between 2020 and 2030, significantly outpacing all other types of energy generation. And it's not going to happen alone, right? There are a number of large businesses that are going to be driving these changes of renewable infrastructure over time, whether it be Apple or Amazon, who have committed to net zero carbon emission supply chains between now and 2050, or whether it be producing green hydrogen or decarbonization of transport, electricity production, or fertilizers with Shell or Ørsted. Or maybe it's the clean energy powering the transition to electric vehicles. Automakers plan 450 new models just in 2020. Or whether it be infrastructure, using decarbonization from wind and solar combined with new battery storage technology with NextEra and Sunrun Energy. These are all opportunities and stated objectives of these businesses to drive their operations toward a more sustainable future. And the Clean Infrastructure Fund is posed to benefit from this trend. It sets out to capture these trends that are driving the world toward a more sustainable future. And with that, I will pass it back over to Terry.
Thank you so much, Matthew. That was an extremely informative presentation that offered great insights into the benefits of responsible investing and why it is so relevant in today's world. You know, our purpose is to increase awareness and understanding the responsible investing can help people achieve their financial goals while making a positive impact. That's what responsible investing means to us at FirstOntario. And we have and believe it's a worthwhile proposition for everyone. Now let's spend the rest of the time we have to review and answer some questions that we have received prior to our presentation. Just remember, if we haven't answered your question, or if after today you have some additional questions or even some comments, please reach out to our experienced wealth team at 1-800-616-8878, extension 1700, or email your questions in to investments@firstontario.com. Now let's see what the questions are and see how well Matt answers them. So first and foremost, the number one question that we got is RIA trend. However, I was always of the impression that this was a sustainable, doable, moving forward philosophy. You yourself had used the term trend many times through your presentation. So if I am going to be meeting with my friends for coffee at Tim Hortons and, something comes up about the world, it eventually maybe not called RI in your conversation or responsible investing, but that's what we end up talking about. And somebody says to me, Matt, is RI a trend? What would you say to them?
I would say that it's absolutely not a trend. And the reasons being are fairly clear, that globally, responsible investing assets make up over $32 trillion. Now, trends don't evolve over a 30-year period. And that's when NEI started in responsible investment. See, it's not just about capturing opportunities of, electricity generation or, decarbonization. It's also about aligning your personal moral and ethical values with how you invest. And that kind of alignment is not a trend. That's just beginning. Everyone has the opportunity to see out their investment portfolio constructed the way that they believe is aligned with their values. And when we talk about trends as well, it's not just about, like I said, capturing the flavor of the day. Responsible investment is about climate change. It's about decarbonization. It's about aligning the values of the investors with the operations of the business. Those things are not going away. Those are one-way streets that only evolve and become stronger over time.
I myself have seen and experienced and worked for companies that were not being managed properly, and the effect. Some of them actually went out of business because of their choices. So thank you, Matthew. That was a terrific answer. Our next question, and I think you've done this, but maybe in summarization for our audience today, is explain how it reduces risk for investors and for people in general.
Another great question. The whole premise of responsible investment is one of the key tenets of it is to identify and reduce risks in the portfolio. So the whole philosophy is an extension of traditional financial analysis, where we take an additional measure to look at those ESG factors and go deeper into the risks that a business can face that do not show up on their balance sheet or on their cash flow or in the profits that they're making, right? So we identify a risk, like for example, I showed BP or SNC-Lavalin. NEI did not invest in those companies prior because we believed that there were inherent risks in their business. So when we identify a company that has risk that goes beyond their profits, we'll work with them to try and reduce that risk. And if they're non-cooperative, we will divest from them. We will not invest with them. And that will, over time, protect investors' portfolios. Because as those bad events unfold, as those companies are not run properly, the share price will eventually reflect that poor management and those inherent risks.
That's a terrific explanation, and I think something that many people can identify with. So thank you for that. We have one more question, and I think that this is just basically a summarization. What are the 3 key takeaways that you want people to have from today's presentation?
That's a great one. So 3 things I would say about responsible investment is that it is an opportunity to capture through your portfolio the trends that are driving the world forward. So electrification, increased population, the companies that are on the leading edge of these trends. The second takeaway is that responsible investment reduces risk in your portfolio. It allows you to identify businesses that are not aligned with the outcomes of the shareholders. And finally, responsible investment gives you the opportunity to align your moral and ethical values with how you invest. It gives you the stage to have your voice heard as to how you want the world to evolve in a fairer, more equitable, and more sustainable fashion.
Thank you, Matthew. With that, we're ending our session today. I'd like to once again thank Matthew Isilauro for coming from NEI and doing this presentation for us. We also appreciate everyone taking the time during their lunch hour to listen and join us for this important webinar about responsible investing. Just a reminder that if you didn't catch some of the items or you want to review them, today's presentation is available on our website, which is FirstOntario.com. Thank you once again and enjoy the rest of your day.
Thank you, everyone. Have a great day.